Happy Sunday, everybody. It is February 5th, and if you have not gone outside at night, I behoove you to do so and have a big, beautiful look at the full moon, which is happening last night and tonight. Full moon, what does it mean? Well, let's look at where we're at here because, as you saw last week, once again, the streak continues. We had 3 green days in a row and then that big gap down and closing right on that 41.36 on Friday, ending the streak of 4 consecutive Fridays, not getting the 5th. And everybody that was over there trading the spreads doing quite well. But again, it is a full moon, and I want to bring your attention to that as we head in. But as we go into it, I want to bring your attention here as well that January ended 299 points for a range. Okay. We had 336 in December. We had 381 in November. And it was August, I believe. We only traded 370 points. This is the range being the high and the low for the month. Now, I shared in the room earlier on Thursday or Friday that the JP Morgan collar that they have for March 17th, the short leg is SPX 4065. So we're 70 points above that as of right now. And there's a plethora of FOMO that is out there and all talking about breaking out and going higher. And for that, I give you the public notice announcement.
But does the public not have a right to know if a balloon
the public
is over
certainly
their state?
has the ability to look up in the sky.
And you very well can. You can go ahead. You can go look up. Go look in the sky. This is what's going to happen to you as you try to climb. Because you can doubt whatever you want to doubt. The data will always be there to support the move prior to the move taking place. That when you go and look back at the data, you say, it was there. It was showing it was going to happen. Well, it's also happening over there in the charts. And I'm going to start you out here with the QQQ because everything, like I had said going back 2 weeks ago, 3 weeks ago, the Dow has topped. The Dow cannot break above that 34,180. It can't do it. So what did you do? You went and got your legs. We came out here over there on that dip down on Tuesday, hit right to that trend line, the falling trend line coming off of the 2022 highs back from April and August, right down to it there on Tuesday. And then the FOMC meeting gave you that big spike up and the abundance of short squeezes. Multiple names that I had picked to be heading to my price targets in Q2 of 2023 have all taken them out. NVIDIA is $8 short. Microsoft is $1 short, and Apple was $2 short of hitting my 2023 upside targets. Everybody got taken out. The only one also that's still pending, which is a FOMO pending, is that Tesla at 208. So you're up here, you gapped above that 300 level, which was that resistance which had been going back for 5 months, gapped up above it, held above it for Thursday and Friday, and you've got this gap that needs to be filled back to 300, and you still have your 5-day moving average below that. This is where the legs of the move to the downside is going to come from. And again, I'm talking about downside, and everybody else is talking about upside. And again, I give you the public service announcement.
But does the public not have a right to know if a balloon
the public
is over their
certainly
state?
has the ability to look up in the sky.
You're very well welcome to go ahead and do that. And by all means, go for it. The charts are the charts are the charts are the charts, and the data is the data is the data. Your 200-day moving average is down here at 291. Your 50-day moving average down at 280, where I, Tim Richards, am looking for as we start heading into later in the month. And I'm now starting to suspect you're going to get a surprise CPI, which is going to take us to the downside. I'm looking for that 286. 286 is the level that I'm looking for, possibly 284. I'm not looking for a sell-off below 284. If we do get one, I'll look at it as a buying opportunity. When you come over here onto the NASDAQ, the NQ, looking over here at the futures on the NQ, looking at the daily, you can see here how we've topped right to this 61.8 retracement. We've come right to this very, very big 23.6 retracement going back to the 2002 lows. And you can see here how you had support right back in January and February, early into March, broke up above it over here in August and failed it right over here back in September. We came right back up to that September. You've got a beautiful inverted head and shoulders here, ready to break out to the upside, above the 200, above the 50. But I'm sorry. This is what's going to happen to you if you try and run it.
We have to get going, sir.
I don't want to go.
I know, but it's time to go.
I don't want to go.
It's time to go.
I don't want to
Sir,
go.
it's time to go.
I don't want to go.
Come on,
I don't want to go.
I know you're having fun.
This is what we're looking at here on the daily. Come over here onto the weekly, and you can see yourself, you have an extremely bullish weekly. Your weekly is very, very, very bullish, as you've had these 4 consecutive weeks running to the upside as you got out of that minus 30% from the all-time highs. Unfortunately, you got the full moon. And like I'm showing there on the cover here of this video, you can see here how you've got these failed breakouts. Your failed breakouts over here on the SPX. And not only do we have the exact same thing, but as I shared you, and I'll show you here on a zoomed in chart where we look at for the day trading every day, we've not only run 20% from this high, as the NASDAQ has run 20% from the January lows. From this low over here in October to where we've run to has calculated out to be exactly just above 20%. You've got your 50 retracement back to the all-time highs here. And these two Fibonacci's right here are incredible at 4176 and 4185. Fibonacci extensions coming from your major cycle highs and lows. You've hit your top. You've hit your top, you've hit your top, you've hit your top. With 300 points to the downside as a plausible scenario, with the full moon, and what I've charted out here for you are where all of your full moons hit in 2022 for those that don't believe. And if you don't believe, and I hope you don't believe, go back, pull up a 2022 full moon calendar, put these dots on your chart yourself, and go and see how everything worked out. The only one that didn't hit an exact bottom for a rally was over here in December, which would have until we got that report there on February 13th, or the FOMC meeting, and we spiked up and sold off on it after we hit that falling resistance line. Now, we've broken up above this falling resistance line, and I'm sorry, but we're coming back down to it. At least we're coming back down to it. Where I'm looking for, as we've had this 30-day run off of that December low, that 37.64, we've had a 3% drop. We've had a 2% drop. We've had a less than 2% drop. We have not had a 10% drop since we had that low over there in October. We had an 8% drop, but not a 10%. Like I showed you as well when you zoomed out and looked at everything from a wide view. Do I have it here? I believe I do. You had a 12% rally. You had a 24% drop from the all-time highs, not the entire drop. You had a 19% rally. You dropped even lower to 27.4 from the all-time highs. Here, I've got to move this and update it. You've just had a 20% rally up to this big resistance falling trend line that got broken earlier in the week. And, you know, I'm sorry, but we're going down. Now, I'm not looking for it to be major down. I'm looking for somewhere around here, 39.08. In fact, I'll pull it here on a 20-day to be more accurate. I'm looking for somewhere around here, 39.08, 39.30, 39.80, just back into that falling resistance line from 2022. Nothing more, nothing less. And I'm not looking for it to take place in the course of a day. It should happen over the course of the month. We will know when we start breaking down below my levels, 4100, 4072, 4040. Then we can start eyeing that 3980, 3950 area. Until then, it's slow steps to the downside, but everything is going to come out of the NASDAQ. And this VIX, it is not telling the truth. It's still not telling the truth. What's telling the truth is over there on the CPC, CPCE, the put call ratios, and seeing these late afternoon, big, huge volume buys that are looking at it to be short. And so, again, I bring you back and I still contest. I'm picking the strikes from earlier in the week because I'm not looking to get extended for anything that is beyond where we've already come from. So that's why on the SPY, you see the trades that I've taken there for March. That's your lows from last week, 398.25. Anything below 398.25 is gravy, but I'm definitely looking for us to get down there to 398.25. And for those who say that it's not going to happen, the full moon's not going to work this time, again, your public service announcement.
But does the public not have a right to know if a
The
balloon is
public
over their
certainly
state?
has the ability to look up in the sky.
Have a fantastic Sunday. I'll see you guys in the chat room.